Boom, boom. How's going? How's going? It is I again, your boy TJ, and welcome to M5 Property Addicts, where we talk anything and everything around real estate. But when you see that guy there, no, that guy there, yeah, well, it doesn't matter where he is. The Christian guy that I'm talking about, he is the guy who understands how to find money. And we're talking about money today, specifically, how do you actually fund a property? Right? How do you actually fund a property? But before we go on to that topic, let me welcome Christian. Christian, how's been your week this week, man?
It's been fantastic, TJ, and yours?
Awesome stuff. Awesome stuff. Let's jump into it, Christian. A lot of people, they want to know, how do you actually fund properties, right? Particularly residential properties. And I think I'll give you a short story of myself when I first bought my first property. I didn't know what I didn't know. So for that reason, I went to an estate agent and they were showing us the properties. And she said to me, I can get the funding for you. And guess what at the time, Christian? I was working for the bank actually, right? And she took all my paperwork and voila, I don't know that there was someone in the background. And she came back a few days later and she says, you've been approved by Bank X. And Bank X was not the bank that I was working for. And out of that, we bought a house. And I think a couple of months later, I was bragging at the office and I said, hey, I bought a house and I'm paying X percentage because I thought it was a good interest rate. And they said to me, but you work for the bank. Why didn't you come there on your own? So today, I know that I was dumb at the time, but I got you. I'm a little bit clever these days. And what is the step-by-step process of getting a property, especially the one that you're going to stay in? So that's a residential property that you're going to stay in. How can you fund for it? I mean, there's many ways you can fund it. Obviously, the first one is you can do it yourself. Go and get some cash and buy cash. But I would never say do that. That's a conversation for another day. But Christian, tell us.
Yeah, so I'm fully in agreement with you in terms of not going for purchasing a property cash, because quite frankly, you're tying up a lot of money and it's all about contingency planning, but that's a topic on its own. So effectively, you will be buying the property cash by means of getting a bond. So the banks will pay that cash to the seller. So the whole process of getting that bond is based on three metrics. Firstly, the banks will look at your credit score. So they'll have a look at what your conduct on your existing credit commitments are. And that's a very, very important element to it. If you're missing a lot of payments on something like a clothing account, it may lead to them just projecting that onto the larger commitment that you take on. And I mean, for most people, buying your house is the biggest debt obligation you'll ever undertake. In that instance, then, if you can't conduct a small account in a conservative way and in a time-yes payment history way, they will decline. Second metric to that will come down to your affordability. So if you are purchasing a property, it has to be in line with what the National Credit Act requires from basic repayment ability. So 30% of your gross income is your maximum bond installment. Once those two boxes are ticked, the property or the bank will look at the property's valuation. So the property has to be worth enough for the banks to have security. So over and above the fact that you confirm to them that you're a good payer, that you've got good enough income, they want to also make sure that that property's value is sufficient security to them. So you'll never find a situation where the banks will offer you 2 million rand financing on a property that's only worth 1 million. They will always look at it as, is that property equal in value to the loan obligation? Because they have to also cover their basis. If you stop paying, they need to sell the property to recoup their money. So that's the basic process in terms of what to look at.
Okay, so there's a number of things that you spoke about, Christian, and I want to dive into it because you make it sound very simple, but actually there's lots of people that put in an application and it gets declined for, I'm gonna say for stupid reasons. And we might not know that these are stupid reasons, but how do we mitigate them? And this show, it's all about educating people so we want to be, by the end of this video here, and if you're to follow this step by step, this is a step-by-step guide, right, of how you can actually get funding from the bank for your residential. So we want to dive in a little bit deeper, or should I say, what Christiaan has just said to us right now, we're going to strip it up so that it makes sense for you, and you can go home and you can start doing this. And you can start planning to say, in 6 months' time, I'll buy my property, right? So, Christiaan, I'm going to ask you the question. Number one, if you don't have any form of debt, like zero debt, like the credit bureau out there, when they look for you, you are non-existing. I'm talking about maybe I've just left school today, or maybe I'm running on cash all my life, and there's nothing that is being reported to the credit bureau. Then is there an impact on me actually getting a loan from the bank?
Yeah, the chances are good that the banks will decline, because they need to have some form of credit repayment history to base your future actions on. I find a lot of new entrants to the market with that problem. And that's also why I always stress the importance of a pre-qualification, so that you can best prepare yourself and not have the disappointment of a decline application. Your credit score will be 0, and that means that there's no data. So with those clients, I suggest that they just go out and open up a clothing account. Something simple, buy a shirt, pay it over the course of 3 months, and by the end of month 3, the credit bureau will already have created a score for you. It might not necessarily mean that that score is already favorable, but the longer those accounts run, the better. So step 1, especially if you don't have a credit score, is try and get a small account and go and register yourself on clearscore.com. So you can get a monthly credit report to see where your score is at. You need to manage it, you need to take care of it, and you need to always, always, always pay on time.
Okay. So in a nutshell, the game of getting debt from the banks is that the foundation is that your credit score needs to be good. That's the bottom line of it. That's step 1 or step 0 of 1, to just make sure that your credit report reflects something. What is a good credit score in your view, Christiaan?
So the credit scores that start getting considered by the banks is from 621 and up. If you look at experience metric on TransUnion or ITC, it's from 700 and upwards where they'll start considering it. So you need to be in what they call the good classification. The higher your score, the higher the likelihood of getting an approved bond, firstly, and secondly, the higher the likelihood of getting a more favorable interest rate, because that all prices into risk.
Okay. I mean, we've always been wondering, how do some other people get a prime -1, -2? And what you've just said now, it kind of like explains that, right? So if you are on the higher credit score, the likelihood of you getting even a prime minus, are we saying that that's true?
Definitely, provided that the property is also lower risk. I had a very good example now of a client who bought a primary residence as well as an investment property. On the primary residence in quite a nice area, he was offered prime -1, and same bank, so same affordability, same metrics, all of that. The investment property being in a less favorable area, they offered him prime plus 1.25.
Oh,
so
wow.
The property also plays quite a big role.
Okay, so the reverse of that also applies. So the lesser your credit score is, anything below 600, 700, depending on who we're looking at, let's just, for the purposes of the conversation today, let's just peg it at 700, right? So at 700, now you're around about 500, 400. Does it mean that the bank may still give you loan, but your interest rate is now a little bit higher?
So it will come down to whether you're still in the acceptable category. So I'll always refer back to the Experian metrics because they're the largest credit bureau in the country. They recently bought CompuScan over as well. So on their metrics, if you're between 600 and 621, it's the category called fair. At that point, they will, in great likelihood, give you a bond. It will either be a lower percentage bond, in other words, that you need to contribute a deposit to it to lower their risk, or they'll price it with a loading onto your interest rate, where you might find yourself being offered prime plus one. I had one client whose score was 609, if I recall correctly now, and the rate offered was prime plus 2.25. So that's very expensive. But I actually told that client, listen, my advice is hold off, rather step away from this transaction, because it is a long-term commitment that you're undertaking, and it's never easy to renegotiate your interest rates. So rather not saddle yourself up with worries in future. Give it 4 to 6 months, conduct your credit correctly, and out of that, get yourself in a position where you are able to apply and get a better rate.
Okay, great. So now we are on step number 1, Christiaan, and we've just spoken about this individual now that is no credit at all. And obviously, I think what we've been talking about, it also works for the guy whose credit record is not correct. You've just solutioned that person now. And if my credit score is good, it basically means that now you can apply. Obviously, step number 2 is that you definitely need to have a property to go and apply. But back in the days,
even before that,
the
repayment ability. Even before the property, you need to prove the repayment ability. So that's very important. Do you earn enough? So the National Credit Act limits you to 30% of your gross income as maximum bond installment. So if you earn 10,000 Rand a month, your maximum bond installment that the bank will grant is 3,000 Rand. So that gets worked back based on the interest rates at the moment. And on 10,000 Rand, you'll roughly qualify for, I'd say, about 340,000, just off the top of my head at the current prime rate. As the prime rate goes up, it will be less. But notwithstanding that, you also have to have sufficient disposable cash flow after all obligations to cover that bond installment.
And when you're
the
saying
affordability side is important.
Yeah, when you're saying disposable income, I think for some people, they get lost on that and like disposable. What do I need to throw away my money? No, it's not. We're not talking about that. We're saying that out of all of your expenses, you still have some money, and that's what's referred to as disposable. So in your budget, you can afford to pay for that. So now that you have gone on to identify a house and you've got some disposable income, another person now needs to come to you, Christiaan, and say, hey, I want to buy the property. And we're kind of like in step number 3 or step number 4. But anyway, you keep on counting whatever steps we are on. Let's just call it the next step. Okay, right. So once we are now on the next step, and on this step now is they now need to submit the paperwork. And Christiaan, I don't know whether I am the only one who sees this, but when people are doing an application, and many a times they're even asked to produce a balance sheet, and they have no idea what a balance sheet is, or income statement, they don't know what that is. Is this common for you, or is this just my thinking?
No, it's more common than you'd think. And let's not digress into education and so forth in terms of what is being taught at schools. I think we can just on that topic record a 4-hour conversation. But as an example, one of your community members did not know what a balance sheet is, and that person is a very, very high earning individual. So I had to coach them through how to approach it. So when you're full-time employed, an income statement won't be necessary, but you need to produce your own budget. How much money is coming in? How much money is being spent? What's left? A balance sheet is also typically aimed at either an investor buying in an entity or somebody who's self-employed, where you need to show that you are solvent, meaning your assets are worth more than what your liabilities are. So your car, as an example, is an asset. The car finance balance outstanding is a liability. If those two are in a positive balance in terms of the assets being worth more than what the liabilities are, you're solvent and you are eligible for financing.
I mean, you speak of, we're not mentioning names here, but I think this is the reason for me why I have continued to educate people, because I see more and more of this within our communities. And sometimes I think this is common knowledge, but yet it is not. But also, these are some of the things that progress us as individuals to create wealth, to leave a legacy. But now, if you don't know those things, how then do you create wealth? You have no benchmark, right? So now that you have submitted that paperwork, what else needs to be submitted here? This is the next step now of the submissions. I spoke about the balance sheet. So an individual, you need to be knowing how much you have or how much you don't have, and how much are you worth actually, because obviously, why would you need this? The bank also, other than your income, the bank can also grant you more money based on your worth. Is that correct, Christiaan?
Yes. So at your higher levels, from a private banking point of view, you can get access to some more creative financing. But I mean, on a normal, plain, straightforward, we go into the stereotype of mom and dad and their 2.5 kids, where mom fell in love with the kitchen. With those type of transactions, typically both of them will be full-time employed, so they've got pay slips, they've got bank statements. Those are the most important documents to accompany the transaction. So each of them will be completing the application forms. I'm also there to assist with that. So if there are questions, I'm happy to guide through it. And then together with that, they need to provide copies of their IDs and proof of income. And that's that.
What if you're a foreigner? I've had this question a lot of times, and then they say, if you're a foreigner, you cannot get credit. And I'm like, that's not true. But what is the right gospel at the moment, right now, 2021, and
almost 22.
Almost 22. We are 2 minutes away from 2022. But what is the correct truth around foreigners at this juncture now, where we are now submitting?
So you've got two types of foreigners to consider there. Ones that are here just on a permit base, so they've got a copy of passport. They need to provide a permit that is valid for at least another 2 years. If it's just outside renewal period and you've got sufficient history with a prior permit, the banks may look at it, but not all of the banks will consider a higher loan to value. So there's a couple of them that will require a 50% deposit. So it's almost as if that person is still outside of South Africa. But two of the banks currently will offer financing between 80 and 90% of the value of the property. So that does open up a few more opportunities, and that does give you a chance to also acquire properties. The one thing, and the other type, is foreigners who have already received a South African ID. So they're a non-citizen, but they've got permanent residence. They get treated as if they are a South African citizen from a financing point of view, and they can get up to 100% financing. So if you're planning on staying here for a long period of time, get cracking on getting your local ID, even if you're a non-citizen, as long as you've got that residency allowance. And you'll typically see it on the ID copy where on the control numbers at the end of it, those last three numbers, instead of it being a 087 or 08 whatever, it will be a 187 or 18 whatever.
Yeah. And Christiaan, basically, this is the step-by-step guide of one actually buying a property. This is a residential property, and we did this specifically because there are some investors out there that could potentially be wanting to buy a property for themselves now, and they're like saying, well, how do I do this? Well, now you've got the step-by-step guide. At this junction now, Christiaan, the job is now really left in your hands, right? To kind of like conclude, take it into the process with the different banks. And then normally what then happens now? So I am the guy who's put in the application. I now sit and wonder on the other side of the world now, what's going to happen? In a week, how long does it take for you to come back with a reply?
I wish I could just always commit on it will take this long, but as you know, having also been in the banks, we have the odd curveball where things can just completely fall to the wayward and take longer. But typically on a transaction such as this, I would say to manage expectations, look at 2 weeks. It will in most instances be faster, but you never know what other types of questions the banks may come back with. So I'd say prepare yourself for a 2-week wait to get feedback from all of the banks so that we can compare interest rates, so that we can negotiate that rate to the most favorable offering to make sure that you get the best deal on the table. Because that's literally what my job is. I need to find you the best deal.
Soon after that, I now look at which bank has given me a prime minus. I've never really received a prime minus, actually. Come to think of it.
We'll work on that.
I think I need to work on my credit score. That's the bottom line of it, isn't it?
Yeah, definitely.
Awesome. And then soon after that, which is now almost kind of like the last step, is I now need to choose which deal is best for me. And there's many things that I now need to consider there. It's almost around, am I comfortable with the interest rate? That's number one, right? And what's the other one that I might want to consider on?
You want to consider the loan amount. So if, you could, for example, receive a 100% bond offer from Bank A at prime and a 90% offer from Bank B at prime minus 0.5. So that'll form part of the considerations in terms of, are you adding extra cash? Are you not? And how do we put those two together? But that's also where I guide you through the process. So I'll point out strange requirements. Like at the moment, one of the banks is adamant. They will not give a bond if you don't move your primary transactional account to them, which doesn't suit.
I was going to say that one, Christiaan. I'm like, those conditions, there are some conditions, that particular one, I don't like. True. I'm not loyal to any bank, though. I should say I am a good prostitute. I like them all. Yeah.
Yeah, but the ideal, especially, if you're buying a primary residence, that's a long-term commitment. It may be worthwhile moving your banking profile, especially if you get a discount on your interest rate on account of doing it. But us buying properties ever so often, if I have to move my account every single time, I will get so confused because I'll be all over the show.
That is true. Ladies and gentlemen, that was Christiaan Jansen from A360. He is out in mainland. And look, he's been helping me with getting bonds from the different banks, getting finance from the different banks. And the reason why I hang out with him and the reason why I am sharing this with you is that at a point, I didn't know all of the knowledge that he's sharing with us today. And the reason why we do that is so that you get educated. In the comments below, let us know what are some of your challenges that you've been having, particularly when it comes to looking for money at the banks. We're hoping that on the next video, we will solve those problems for you. We will check you out on the next video.